So Joseph, we've been getting a steady stream of reports that the Chinese banks are planning to issue lots of preference shares, want to raise capital. They're out there trying to get permission for these sort of things. What's the story? What are they trying to achieve here?
Yeah, I mean, these are the big four Chinese banks mainly, and they may issue preference shares. I mean, there have been numbers of up to $55 billion, but we still need to see what issuances come out. And they've been issuing subordinated debt previously this year, so sort of bonds, and these are sort of preference shares. And the question really, however, is why are they doing it? Is it really...
So why are they doing it? I mean,
yeah.
I mean, we've had some bad news on the economy, but really we haven't had too many. We've had some scary bits of news, but we haven't had a lot of serious loan default news.
Well, you almost have to go back to the sort of 2009 expansion of lending after the 2008 sort of slowdown, where Bank of China, for example, which is the fourth largest lender, increased its mainland lending by over 50%. And in 2014, its shares are trading below book value because the market seems to suggest that there are many more sort of non-performing loans from that area still to be recognised and still to be written down effectively. I mean, Bank of China's non-performing loan ratio at the moment is only 1%.
Right, so exactly. So we don't have yet the metrics. The market is pricing most of the bank stock, as you mentioned, below book. If you believe the book value, essentially, I think you've sort of said in the past that maybe is there some value here? And would these preference shares offer
I mean, to that end, preference shares might look like a free lunch because it raises capital, and also they are likely, it's not been confirmed yet, but likely to have quite high yields. And by high, I mean
how high?
Between 6 and 8%, which both within and outside China are rare yields to get, usually. And so, the Chinese banks are high dividend payers. They have yields of 7% usually. So they kind of maintains those payouts over the next few years by issuing these preference shares.
Yeah, and what's happened with these banks recently, since this kind of news has been, these reports of this has been drifting out, have they reacted at all? Have you seen much movement in them?
Well, I mean, if you take Bank of China, for example, its shares have risen by a fifth since a sort of trial in March. But that's not necessarily beating the market necessarily. I mean, it's again, people are attracted to the free lunch of the preference shares, if they come in future. But there is also a cost, really, a hidden cost to issuing these shares because they have such sort of high yields, and there's the cleanup still to come. So you still have to sort of price that if you're going to be buying these shares. They may be cheap, but you still have to price the risk.
So Joseph, yeah, very interesting. So I guess a lot rides on whether there is a proper loan cleanup in China. So thanks.